Welcome to the Carolina Panorama Spotlight, where we ask the most client-demanding questions. Today we have Miss Natalie McKinnie here in the studio from Natalie McKinnie Insurance Agency. Hi, Ms. McKinnie.
Hi, pleasure to be here today.
Well, it is a pleasure to have you in the studio today. I have an understanding that you have a BA in journalism from the University of South Carolina here in Columbia and over 20 plus years of experience in the insurance industry. So welcome to the Spotlight. I know the viewers out here have a ton of questions for you, so we're just going to go ahead and say you have a customer who hasn't had any accidents or issues, but their rates happen to go up. Why is that the case, and how do insurance companies go about raising their rates?
Well, that's a good question, Ebony. When we're talking about auto insurance, you basically are looking at the population, let's say by state, for example. In a particular state, you may have a state where there's a population of millions of people, but in that population, you have a different rate classes. There's preferred, there's standard, and then there's the non-standard market. Preferred would be those clients that have the best credit rating, that may stay in the better zip codes and things of that nature. So their prices for their auto insurance, for example, would be rated differently from someone who is part of a population where they have driving record issues. They may have more tickets, they may have more accidents. So even if you're, as an individual, you don't have any tickets or any claims, but you're part of a population that have experienced more tickets and claims, then you're going to be affected by that as far as your rates are concerned. So oftentimes that's what's happening. It's not, of course we all want the best rates because we haven't had any tickets or accidents, but you may be in a population or in a particular county or maybe in a particular city where your rates are affected by the drivers who are in your class.
Okay. So going off of that, in regards to insurance rates, why are there so many variances?
Because you have different populations within the community, and you have different companies. Some companies will not do non-standard clients, meaning their company is structured so that they will only insure the best clients that have the best credit rating, that may live in the communities where it's not heavily populated, or all those factors factor into your rate. So that would be that would be the main issue. Okay.
So let's say I'm looking for like a new insurance policy. How do I know that I'm getting the best rate?
Okay. Well, you can shop around because, like I said, you have some companies that will only do preferred clients. You have some that will do non-standard, which means they're particularly not looking for the person that has the best credit rating, that has the best driving record, and those factors. So, for example, with you being a young adult, across the board, most young adults under the age of 25 will have a higher premium per se because you're younger, you don't have as much driving experience, and the companies are going to look at that. They consider you a higher risk because you are what we call a youthful driver. Okay. I've had young adults who have pursued their own insurance policy, or their parents have said to them, look, you got to find some insurance, because previously they were on their parents' policy. But let's suppose they had a couple of speeding tickets, or they were in a really bad accident. Well, adversely, because they were on their parents' policy, their parents are now carrying the burden of the higher premium. So they will say, you need to get your own insurance policy. So you as a young adult, you will say, okay, I'm going to get my own insurance policy. But you're under 25. But you also have that accident or that ticket on your driving record. So for a young adult who has not had any experiences with a ticket or driving accident, but you have, then your rate will probably be a little bit higher than it would normally be.
Okay.
So all those things factor in. So I try to encourage my clients when they come in, young adults or even, parents, just be careful with your driving. Be careful, because it will affect you in your tickets and your accidents will stay on your driving report for at least 3 years. And for those 3 years, the insurance companies will what they call surcharge you because you have those factors on your driving record.
Okay. So let's dive into the trust factor between the consumer and insurance agents. Do you think that bad experiences play a part in why a lot of consumers don't trust insurance agencies?
Well, I think they have more bad experiences that cause them not to trust. Oftentimes, with insurance in general, we're just not, as a population, we're just not as educated on it. So it's important that when you seek out an agent, that you feel comfortable with how they're explaining your coverages, what you're actually getting. Are they asking you questions about what do you actually need? For example, even if you have just car insurance, I'll get clients that will say, give me the cheapest thing you have. Because, we don't want to pay high insurance premiums. But my question to the client, and I try to get them to understand, is if you are a homeowner and you have multiple vehicles and you want the cheapest thing that I can offer you, that you're in essence asking me to underinsure you. And nobody wants to be uninsured. The state limits as far as car insurance is concerned, I believe they're the same in South Carolina as they are in Georgia, which I'm based out of Georgia, but I also service South Carolina, by the way. It's for auto insurance is $25,000, $50,000, $25,000. And what that means for $25,000 bodily injury for any one particular client, let's say you're in a car accident and that client is hurt, that's the bodily injury. And they have to maybe go to the hospital, they may have to have physical therapy and things of those natures to get them back to better health, okay? If their bill is exceeding $25,000, the maximum the insurance company is going to pay to restore their health is $25,000. But you ask for the limits, the cheapest thing possible. But overall, the $50,000 in that $25.50, meaning for one particular accident, the maximum that insurance company is going to pay is $50,000. So that means for your bodily injury, that means to repair your vehicle, to cover your medical experiences and everything. So if you have over $25,000 in bodily injury, that's supposing only one person got hurt. But if you have multiple people in the vehicle, that's not enough to properly insure you for that accident. Mm-hmm. So then there are other financial repercussions you would have as a customer because you didn't have enough insurance. So those are the things I try to educate my clients about, is you actually really need to sit down with your agent and evaluate how much coverage you actually need to protect yourself as well as be protected from others.
Okay, well, let's talk about flood insurance. Okay. So there was like a 1,000-year flood that took place here in South Carolina a couple years back, and a lot of people thought that they were covered until they found out that they weren't. So can you clear up any misconceptions or just bring clarity to flood insurance and how it may not be included in homeowners insurance?
Okay. Yes. Flood insurance is not included in homeowners insurance. Homeowners insurance pretty much just takes care of your home. And floods take care of a catastrophic event that would cover a flood. So when you all here in Columbia experienced the flood, there were several things that played into that. Most people feel like because they don't live near a river or they're in a flood zone that they don't need flood insurance. But you have to also look at factors such as the New York was a perfect example. Recently, when I think it was Hurricane Ida came through, and New York had several areas had a lot of flooding, but they didn't live in a flood zone. But the infrastructure, meaning the road systems, the drainage systems in their area were not upgraded to handle the amount of rainfall and runoff that they had at the time. And property owners experienced floods. But because they didn't have flood insurance, their property was not covered for that. So that's why you need to also research your area and also have flood coverage.
Okay. So we're currently living in a global pandemic. And so I kind of have to ask you about COVID and how that has impacted the insurance industry and maybe how it's also impacted those with policies.
Wow. Well, COVID has affected everybody, every industry, every people. The insurance industry is in a precarious position as far as, let's use auto insurance for example. When the world shut down because of COVID, you had less people driving. So with less people on the road, that means that the insurance companies were not receiving a lot of claims. So people they were not driving as much. So there's monies that was still being collected for premiums, but the people aren't driving. So that's why you saw a lot of rebates where clients were allowed to skip payments or even not make payments or got premiums returned to them as rebates during that time. But if you haven't noticed lately, once the communities and the countries open back up, recently you got people back on the roads again. So you may have experienced during the pandemic where even with the rebates, premiums went down. But now all of a sudden, premiums are going back up because there are more people back on the road again. So that's a prime example of how what's going on with the population affects insurance. So COVID has had some advantages and disadvantages for the consumer. Everybody was happy last year getting those rebates from their premiums. I got mine, I loved it. But now, like I said, you have rates going back up because now people are on the roads again and they're driving. So that's the population, and what happens in the population will always affect your insurance premiums as far as auto insurance is concerned.
Okay.
Okay.
So let's shift some gears from homeowners insurance and auto insurance to renters insurance. So could you shed some light on what it is, and maybe some information that people who are renting might need to know, and feel free to add examples.
Okay. Renters insurance. Renters insurance are for those who are renting properties, whether it be apartments, condos, trailers, or like that. So renters insurance covers your property. Let's say you have that's your furniture, your computers, your electronics, those type of things is what renters insurance covers, as well as liabilities. So if we encourage people to get renters insurance, some people don't, or even college students should have renters insurance because you've got computers and laptops. So those things can be covered on your renters insurance policies. A prime example, I believe was Miami, where the building collapsed. In situations like that, if you had renters insurance, then you were able to file claims to get some of your property, replaced because of that catastrophic event. But if they didn't have renters insurance, they're having some challenges because they didn't have the proper coverage in place.
Okay.
Okay.
So moving back to homeowners insurance, let's say there's someone who has paid off their mortgage or a family who has built their own house. Why is homeowners insurance still important in those cases?
Well, most people feel like if they have paid off their mortgage, then why should I need homeowners insurance? Well, the primary reason is because that has value, and it is a property that you own. If you paid your house off, then you've spent at least 20 years or more paying on the mortgage to actually own that property. So it makes sense to insure your property. And I always encourage customers, if they paid their mortgage off, keep your homeowners insurance. Because if there's a risk that happens to your property, whether it be a fire or a storm comes through and destroys your roof and things like that, the insurance is to cover that, to replace it. So it's always good to have homeowners insurance.
Okay, so based on your responses to the questions, I think we can both agree that the main cause for the distrust is the lack of education that customers have. So what are some solutions that you have to kind of improve the dynamic between the two?
Well, the first thing is, I think most people, just out of habit, they shop by price. Who has the better rate? Like if their premium starts going up, then they'll jump and go to another company. And that might be every 6 months. But, insurance companies look at that and see you as a risk because you're not showing long-term responsibility per se. You get discounts for having coverage at least 12 months or longer. And your company generally will give you what they call loyalty rewards and whatnot the longer that you're with them, because they know that you are a good client. So overall, my thing is I try to educate their clients about what they actually need, how to properly protect them, because my job is to also protect them and to give them the best possible product for their needs. So it's important to educate yourself. Take your time to do an annual review with your agent. Bring your policies in. Let them know that you've probably added on another room to your house. Let them know that you've added a swimming pool. Those things are important. But a lot of people will kind of maybe not mention those things because they don't want their premium to go up. But even if they shop that way, the whole point is they're underinsuring their property. And I would rather you keep your value and to be able to retain the proper insurance to protect your interests. So that's one of the ways how clients can stay abreast of what's going on in the industry, the changes, and how that affects you. Because we want to keep our clients, and we want our clients to always have the best product.
So to wrap up today's spotlight, is there anything that you want to add in regards to this industry, or is there something that you would like to tell me that most people don't know about your industry?
If you'd like an opportunity for us to sit down and evaluate where you are, please feel free to give us a call. Our number is 706-771-0007. Once again, that's Natalie McKinnie Agency.
Thank you, Ms. McKinney, for joining us and being open and honest to answer the tough questions that are difficult to answer sometimes. If you're willing to join us again, we would love to have you back in the studio to answer more questions in regards to the insurance industry. But thank you again.
And remember, for your opportunity to shine in the Spotlight series, simply send us an email at spotlight@carolinapanorama.com. And don't forget to mention the word Spotlight. Our team will get back with you to ensure you're able to address your most client-demanding questions. We look forward to hearing from you soon.